The Tax Reform Unit is pleased to present broad concepts of a value-added tax system. The objectives of this presentation is to present the basic concepts of the VAT system, to explain your rights and responsibilities as a final consumer, to explain the administrative needs for a VAT to operate, and to highlight the potential impact of a VAT. The presentation will take the following outline: VAT basics, history of VAT, VAT in the Caribbean, VAT and other taxes, paying VAT, features of VAT, benefits of VAT, and VAT and you. Basics of VAT. What is VAT? VAT is a tax on consumption. It is charged on the value of imports and on the value added on goods and services supplied by one business to another or to the final consumer. What is value added, you might ask? It's the value that a business adds to his supplies before selling the goods or services. Who will pay the VAT? Businesses and individuals purchasing goods and services will pay the VAT. Who can charge VAT? Only businesses registered as VAT registrants will charge or collect VAT. How is VAT charged? VAT will be charged as a percentage of the value added to the good or service at each stage of the distribution chain. History of VAT. VAT was first introduced in France in the year 1948. It then moved to Brazil in the year 1967, and in the 1970s and 80s, it spread to some 63 countries worldwide. Presently, more than 150 countries around the world have the VAT system, and 70% of the world's population live in countries with a value-added tax system. VAT's presence in the Caribbean. VAT has been in operation in the Caribbean since the year 1982, when it was introduced in Haiti. Later, it moved to Dominican Republic in 1983, Trinidad and Tobago in 1990, Jamaica in 1991, Barbados in 1997, Belize in 2006, Dominica 2006, Guyana, Antigua and Barbuda, St. Vincent and the Grenadines in 2007, and Grenada in 2010. Presently, it's being considered for implementation not only in St. Christopher and Nevis, but in the island of St. Lucia. VAT and other taxes. VAT will replace some 12 existing taxes. These are consumption tax, telecommunications levy, hotel and restaurant tax, cable TV tax, gaming machine tax, public entertainment tax, export duty, parcel tax, vehicle rental levy, insurance premium tax, lotteries tax, and the traders tax. Paying a VAT. VAT will be charged at varying rates. It will be charged at a standard rate that is yet to be determined, at a zero rate, and a reduced rate that is presently being considered for hotel accommodation. You will not be charged VAT on all goods and services. Exempt supplies are not taxable. Features of VAT. In order to charge and collect VAT, a business must meet the threshold and be registered. The threshold amount is the minimum yearly gross sales a business makes in a year. The amount may be in the range of $100,000 to $150,000. These businesses must register with the Inland Revenue Department. Features of VAT continued. VAT on imports. Businesses who import goods and services will pay the VAT to the Custom and Excise Department at the time of import of the goods. Consumers importing goods will also pay the VAT at the same place. VAT on domestic products. Only registered business for VAT can collect VAT on the sale of goods and services to other businesses and consumers. Consumers purchasing goods or services from a VAT-registered business will pay VAT. Businesses that collect the VAT will pay the difference, that is, output VAT minus input VAT to the Inland Revenue Department monthly. The calculation for VAT is the following. Output VAT, which is VAT charge on sales, minus VAT paid on purchases and imports, that is input tax, which equals to the VAT should be paid or the VAT that should be refunded by the Inland Revenue Department. Calculation of VAT payable or refundable by a registered business. Example 1. VAT payable. Output tax, that is a VAT collected on sales, $5,000, less input tax, that is the VAT paid on purchases and imports, $3,000, equals to the VAT that should be paid over to the Inland Revenue Department, which gives you a total of $2,000. Second example, VAT refundable. Output tax collected on sales, $5,000, less input tax, that is VAT paid on purchases and imports, $8,000. The VAT that should be refunded to the VAT registered business is $3,000. Benefits of implementing a VAT. VAT is a fair system. Everyone contributes. It is a simpler system for government and the taxpayers. It is broad-based since a number of goods and services will be charged and more services will now be taxed. VAT will not be charged on certain basic food items. VAT will reduce the average cost of importing goods. It is a modern system as it compensates for the shift in the economy from goods to services. VAT and you. As a final consumer, you should know which businesses can charge VAT. Ensure that you see the VAT registration certificate clearly displayed at business places before paying VAT. Know which goods and services are taxable, exempted, and zero rated. See that prices displayed contain the VAT. Collect sales receipt from businesses. Make sure the sales receipt has total VAT paid. What you need to know. VAT is a replacement tax. VAT is a visible tax, unlike the present consumption tax. VAT will replace some indirect taxes which are included in the price of the items you now purchase. Certain basic foods and other essentials will be exempt or zero rated. Therefore, you pay no VAT on the selling price. If you would like to contact us, please visit us at the Tax Reform Unit on the second floor of the Finance Building on Church Street, or please feel free to call us at 467-1931, or you can feel free to send us an email at info@sknvat.com, or visit our website www.sknvat.com. VAT, a simpler and more efficient tax.